Well, Ed, I know you've been in this space for at least 15
Yeah.
years, and maybe there's some evolving trends. How does the IRS view captives?
This is a very timely conversation, Adam. Within the last week and a half, there was a pretty significant win in the small insurance company space, right? The 831B space. Um, Last year, the IRS put some new regulations in place and kind of strengthened some existing ones. But there was some punitive language or some assumptions on the IRS's part that all small insurance companies were bad. And so they were making it more difficult to do. Still doable, but it was becoming more and more complex. A couple of weeks ago, a judge in Texas, in Houston, in the federal court down there, a district court, struck down basically the most punitive part of those regulations. Now, it remains to be seen how widely accepted those are, if the IRS is going to appeal, but we feel very confident that this is a really, I would say, I'll call it a turning point to where we think the IRS is going to say, okay, this is what right looks like. This is what doesn't look right. As long as you stay over here, there's some safety. And so we feel comfortable with that. People ask us, like, are you guys still forming small captive insurance companies? Absolutely. We're going to do it right. We're going to treat it like an insurance company. It's not a put the money in on Friday, take it out on Monday to buy a boat, right? It's a real insurance company. But as long as we fall within those guidelines and we're seeing these positive signs from the IRS, we feel pretty comfortable with some safety there with the IRS.